NCC is the management that is joining us on the show right now, because the company, I think over the course of the month of March, won orders about 1,000 odd crores. Not spectacular, but that's the question to Mr. Y.D. Murthy. He's Executive Vice President of Finance at NCC. He joins us on the show to talk about these order wins and some more. Good having you, Mr. Murthy. Thanks so much for joining in. We were just talking about what some of the companies in the infrastructure space have done with this increased spate of orders that have come in from NHAI. Congratulations on these 1,000 crores that you won in March. But how has the last 6 months been in terms of order inflow for NCC as a company?
Yeah, order inflows in the financial year FY18 have been very strong. And in the 12-month period ending March 2018, we bagged fresh orders of about 24,523 crores, including these 1,085 received in the month of March. So we are looking at execution picking up in FY19, and substantial improvement in the top line is expected. Our board is meeting by the end of this month to finalize the business plan for FY19. Based on that, we will be able to share the numbers.
Okay, I'm sure, and we'll talk to you post those meetings as well. But what's the nature of the order wins that you had? I heard you mention a number of 24,000 crores, if I'm not wrong, for FY18.
Yeah, that's it. Yeah, there is a fresh order accretion is 24,500 crores.
So what's the nature of these order wins?
About 50% is in buildings, around 13.5% in roads, and about 22% is in water pipelines. In all these three verticals, we have got strong execution capabilities, and we also have a leadership position. These three verticals put together constitute about 80 to 85% of the order book of the company, as well as the top line of the company. So it is looking good for us because they can add nicely to the top in FY19.
All right, Mr. Murthy, can you talk to us about the expected, order inflows or projections that you can expect in the next couple of quarters, if not the financial year? Can you give us more of an idea about where you're expecting traction from?
Yeah, order execution should be strong going forward. We are seeing a lot of traction in the affordable housing segment as a contractor, not as a developer. Various governments are coming with affordable housing projects under the Prime Minister Awas Yojana, and we are confident we will be able to bag some orders in that segment. And then the roads is looking good. We are expecting some orders in the UP Expressway projects and also the proposed Nagpur-Mumbai highway project of Maharashtra government. Likewise, we will definitely participate in the Bharatmala program and also other orders being called for by the National Highway Authority of India.
Right, Mr. Murthy. So when it comes to your expected orders, what kind of a margin mix can we work with? And I want to ask you this question because I want to understand, get a better understanding of profitability. You spoke about your road projects, and then you also spoke about your affordable housing projects. What kind of margin picture are we expecting in these projects?
Yeah, the margin improvement has happened. In fact, we are looking at a gross profit margin of around 15 to 16%. EBITDA has improved beyond 10%. In FY19 also, we are confident to report EBITDA margin of at least 10.5%.
All right, Mr. Murthy, and another question on your debt mix. Do you expect your debt mix to change as we move into this financial year? And by that I mean, do you expect your interest costs to come off? And do you expect your mix of long-term loans in comparison to short-term loans change as well?
Yeah, first of all, the debt levels have come down substantially thanks to the QAP issue that we have launched successfully in February 2018. We received about 550 crores of money as a new money into the company. We issued the shares to the investing public. And those monies are available for the company. So the debt levels have come down substantially. And the debt equity is around 0.3:1 or so. But going forward, in FY19, there could be some increase in the debt, mainly because we are looking at top-line growth compared to FY18. But the interest rates have come down. That will be reflected in the FY18 numbers profit levels will also be good, and the interest rates have come down. But now we are again looking at some hardening of the interest rates as we go forward. One has to wait and see. But we are very much confident that debt levels can be maintained under control.
Okay. One last question, Mr. Murthy. You almost told us thrice that the top line growth will be the focal point in FY19. I know you're still finalizing those numbers and you will come back only at the end of the meeting that you have. But is there a ballpark estimate you want to leave us with, the kind of growth that you're looking in FY19?
Yeah, around 20-25% top line growth we are expecting. That is quite possible. But ultimately, board will take a decision when we meet in the fourth week of April.